engineer, then gold medalist in CA. In his early life, his headmaster had challenged him to come first in every class, and so that he will get us a full scholarship in school education. And Nilesh Bhai graciously accepted that and continued his first run all through. Nilesh Bhai has known as one of the most powerful and delightful voice of the industry, and he is part of the Economic Advisory Council to the Prime Minister. He's on the AMFI board, president of Bombay Chamber of Commerce, and Nilesh Bhai is actually more famous for simplifying things with very simple words, complicated things in a very simple word. So I have an uphill task to in the conversation today. Nilesh Bhai, I'm feeling like Vaibhav Suryavanshi batting on the other side with Sachin, or a new actor, sharing a screen with Shah Rukh Khan. I mean, that's your magnifying presence. So I'll start the conversation. My first question, I will borrow from your analogy. You said that markets these days behave like Amar Akbar Antony, and one should stick to Amar Bhai, good companies with strong fundamentals. But my question to you, Nilesh Bhai, how do you stop your own fund managers to stay away from the colorful Antony Bhai?
So thank you, ICC, for having me here. And we have to recognize that every human being is fearful as well as greedy. And unless until there is institutional check, he or she is likely to be driven by emotions rather than rationality. So at Kotak Mutual Fund, we have created boundaries within which fund managers have to operate. And if they are operating within those boundaries and there is a foul to him for reasons outside of boundary, that debit is never given to them. So for example, there was one IT company which in 2017 moved from 1% to 4% of mid-cap index. And Calcutta's homegrown boy Pankaj Tibrewal was managing our mid-cap fund. He was underperforming benchmark index. But in that year, his bonus was not impacted because we excluded that stock from benchmark index for calculating his performance. The call was taken by the investment committee that we won't invest in that IT company because we didn't like the governance, we didn't like the business model. The fund manager then cannot be punished for it. If I would have docked his bonus because he underperformed index, then it would have been unfair. So we remain fair with our fund managers in dealing. Boundary ke andar khel. And if you outperform, you get paid. If you underperform, you will be penalized. Outside of boundary, it is investment committee's responsibility.
Okay, wonderful. So I'll move to the next question. Nilesh Bhai, you had given a kind of a caution that don't expect too much in 2026. It will be, an average, above average kind of year. However, young investors who have, let's say, started an SIP around 2020, they are still making money. Now, it is for audience to simplify the question, it is like this. The grandfather is telling his grandson, beta gadi aram se chalao. But he is nodding the head, but still driving fast and reaching the destination. So in such scenario, how do you educate this kind of investors that, while the journey so far is okay, but there lies some danger, or, one needs to be careful?
So there is no substitute to financial education or literacy. And today's generation is fairly smart. They are well connected with the world. They follow and track news more than us. So it's not that we are going to tell anything which they don't know. Our job is to keep the mirror. अब सामने वाले को देखना है तो देखे, आंख बंद करे तो उसकी मर्जी. But that should not deter us from pointing mirror in our investors' face.
Okay. The next question is on your conviction call on mid cap. So Nilesh bhai, your outlook, you had mentioned that mid caps are going to do better than large and small. At the same time, you have also acknowledged that the margin may be narrow. With 73% of NSE 500 stocks still more than 10% below their 52-week highs, it's really a conviction call or it's like a educated hedge?
So you can't have conviction on entire mid-cap basket. You are taking a guess, because at the end of the day, index performance is function of what constituents do. Your conviction will be on few mid-cap names. For example, if you can find an auto component company which is so good in precision engineering that when Toyota went for outsourcing of their engine spare part, instead of selecting a Japanese company, they ended up selecting this Indian auto component company. Now, your conviction there will be far higher. So, on a select bottom-up basis, we have high conviction calls on mid-cap. But overall, mid-cap doing better than large and small cap is an educated guess.
Wonderful. I mean, that's Nilesh bhai. I mean, a very clear, straight answer. No ambiguity. Moving on, Kotak has, noted that India must leverage rupee depreciation to boost exports and accelerate reforms in land, labor, agriculture. Nilesh bhai, India has been saying land, labor, agriculture. Given these three are politically the hardest reforms to execute, are you pricing on hope or do you genuinely see structural movement?
So, there was one meeting of economists with Prime Minister at Niti Aayog, and everyone gave their suggestion, and then Prime Minister's time came to reply. His first comment was that when you are dealing with government, be persistent. Don't expect that your first suggestion will be accepted then and there itself. If you believe that suggestion is good for the country, keep pushing it. Persistency will pay. And isn't that what happens in our own family? In our family also, we have to be persistent to push our kids from one direction to another. The government is no different. And as part-time member of Economic Advisory Council, I have seen multiple of our suggestions getting implemented. Obviously, full-time member like Sanjeev Sanyal and Shamika Ravi, they carry far higher load along with chairman. But are there suggestions getting implemented on ground? Answer is undoubtedly yes. So we have to be persistent. We have to present our case in a convincing manner. We have to convince doubters that things can change. I don't think so any of us is trying to bring the sun out. We are all trying to light the candle. Agar enough candle jala lenge, to andhera to dur ho hi jayega.
Awesome. I think this deserves a big round of applause. I mean, as I said in the beginning, he would simplify most difficult analogies into simple words. So, Nilesh bhai, your another famous quote I am going to share. I mean, the moment we switch on TV, DTH, there is only the loud and bold name is mutual fund sahi hai. And you made a very pertinent remark. Mutual fund sahi hai, but sirf equity sahi nahi hai. you had pointed out that, one should look at asset allocation, one should definitely be mindful about debt, and even now, the gold or silver funds have very minor allocation in terms of the overall flow coming in. So my question too is that how do you uh, want to make the investor aware about the risk and the importance of asset allocation?
So in India, I started my journey in mutual fund in 97. And in many places, including in the city of Calcutta, I was thrown out of client meetings. I still remember we had gone to visit an office in Kolkata and हमारा कार्ड लेके वो अंदर गए और वो बाहर आके बोले कि आप लोगों को यहाँ आने की जरूरत नहीं, भागो यहाँ से. We were thrown out because the experience of previous multinational company in mutual fund was not very good. From there, we have come and established कि आज 2 साल से return नहीं दिया है, but you are calling me and making me sit on the stage. The credibility has been built brick by brick. The first credit should go to the regulator who ensured that we remain within boundary. And we were not always the good kid. We were running liquid fund with 1 year maturity also. And regulator had to show us red card कि भाई 3 महीने की maturity liquid fund में बहुत है. But we learned our lessons and now we try to remain within boundaries. Second credit should go to distributors. Saibal Bhai is here, you are here. All of you have carried our message to the investors. And more importantly, have handhold them, especially in bad times. 2000, we lost money. 2008, we repeated it. 2013, we repeated it. 2020, we lost money. 2026, we are doing the same thing. But it is you people who have built connection with the customers whereby we are able to retain their trust. So whatever we did on mutual fund in terms of good regulation, good handholding of customer, and a good performance, we have to repeat on asset allocation side. And today, hand on heart, I can say our asset allocation funds have delivered. We run 2 asset allocation fund, one which is now about 20 years old, second which is about 3 years old. And hand on heart, I can say, Anindya Bhai, they would have outperformed 99% of investors in India.
Outstanding.
99%. Last 1 year, my multi-asset allocation fund return is 25% when equity market is negative. Over 20 years, we would have delivered, I don't even want to share the number, you can check for yourself. But when we demonstrate that 99% of investors' return we are able to outperform over 20-year period through disciplined process of asset allocation, there's nothing better than that. जो बोल रहे हैं वो करके दिखा रहे हैं.
And nothing can be better than that.
Nothing can be better than that.
I mean, proof is there. Proof of the pudding is in eating. So moving to the next question, Nilesh Bhai, there is a 38 lakh crore elephant in the room. While our industry AUM is 80 lakh crore, but 38 lakh crore still remains in cash under the mattress or wherever. So, Nilesh Bhai, is it a problem from distributors like us, or is it a trust issue, or is it a product design issue? Why, in spite of so much of awareness, there is so much cash being hoarded?
So in India, Bhai, it's a problem of multiple things. In US, money market funds have check-in facility. You can operate money market fund almost like a savings bank account. Undoubtedly, if we get that permission, banks will lose out on their CASA balance, but I'll be able to shift a lot of money from currency in circulation to liquid fund. Second, at the end of the day, mutual funds has reached about 6 crore customers. There are 145 crore Indians. Remove the kids, remove the elderly. But there are still 100 crore Indians whom we need to touch to convert their cash balance into our AUM. I have barely reached 6 crore. So till such time I go from 6 crore to 100 crore, how can I assume that I'll be able to convert cash into AUM? And finally, currency in circulation also serves certain purpose. So I need product, I need distribution, and I need superior performance to convince investors that you have to part with your cash in favor of my liquid or money market fund. Dhire dhire ho jayega.
So you mean that it's a combination of all the factors,
Yes.
which will convert cash into. Okay, wonderful. So my next question is on SIP behavior shift. You had noted that post COVID, the number of long-term investors have surged, and investors are now willing to buy even when there are market corrections or FPI sellings, which is called as a counterweight, that Indian domestic investors are pushing enough money to ensure that we are largely not only dependent on FII, FPI. So that's quite a staggering statistics. I mean, my question is, what happened to the new retail investor who's barely in the market for 2-3 years, and while he's continuing his SIPs, etc. In fact, our first session we had the NISM, AMFI, and the SEBI directors, they mentioned that some 45% SIPs have stopped during these issues. So, Nilesh bhai, to come to the crux of the question, how do these new age investors who have started SIPs, we educate them, we make them realize and ensure that the continuity flows?
So it's better to show practice than preach. And the best is our SIP form or account statement. If they see our SIP account statement in March 20, we were negative for 3 years. We were near savings account return for 5 years. And our 10-year return had come down by 50% comparable to bank FD return. Today, the same statements in this bear market is showing double-digit return. Their account statement will be exactly at the same place where we were in 2020. And we had 3 choices. Ek, redeem kar do. Your notional loss would have been converted into real loss. Second, do nothing, let SIP continue. You are getting double-digit return. And third, SIP top up. You bought when things were cheaper, your returns will be 2-3% higher. We have to demonstrate to them, this is what I did, and these are the consequences. Investors are smart enough to recognize what they need to do.
Wonderful. Nilesh bhai, you have had the outstanding record. I think you are the only one who has led 3 different AMCs as best awarded AMCs. So, which is Franklin Templeton, iPru, now Kotak. So, what is it that make the massive changes we see, like Jose Mourinho or Pep Guardiola? I mean, you are in that similar role. Wherever they go, they make their team win. So, is it the process, the philosophy, or the man, Nilesh bhai?
So, again, if Tendulkar was playing alone, how many matches he could have won? Cricket is a team sport, so is investment. Second, we also have to recognize contribution of luck. I was the first debt fund manager in 97 who witnessed NPAs. In Templeton India Income Fund, we had invested in some of the papers which defaulted. And I was lucky that my distributors didn't doubt my character. My management didn't doubt my character. And they took those NPAs in AMC balance sheet to indemnify the fund. If that would not have happened, I wouldn't have been fund manager. So you have to be thankful to the God that somewhere He's smiling on us, and that's why we are able to deliver. And finally, it's all about culture. Today, it's so easy to get Best Fund House of the Year award. And the method is very simple. Go and buy illiquid stock, push up the prices with your buying, your performance will look good, more flows will come, repeat the cycle. And at the peak, leave the company after getting Best Funders of the Year award. But ये आप एक बार कर पाएंगे, हर बार तो नहीं होगा. So you need to have culture in the organization which is willing to back longer term performance. It requires discipline to build boundaries. Like we built during 2017, letting go one IT company, even though for 1 year it gave us tremendous pain. It requires culture of teamwork, not the star fund manager. I may be getting all the limelight on TV, but I know there are people working behind me. That's why I could be on television. So it's all about little bit of luck, little bit of culture, little bit of discipline. Put together, you create a winning combination. But it is the team which matters, not the captain.
But Nilesh bhai, I have a counter question, if you may allow. You know, I have seen my colleagues. I mean, you know, we come from banking industry and then now an MFD. So when somebody has shifted from an MNC bank to an Indian private bank, they really struggle with the culture. But I mean, for you, it was seamless. You started with Franklin Templeton, moved to iPru, then to Kotak now. I mean, you never, when you mention culture, you never found any contradiction, conflict of an MNC culture and Indian private institution culture? And how did you so well managed it?
In India, by culture to culture है, उसमें देसी क्या विदेशी क्या. Templeton taught us to keep client first. Let me share one incidence. From 97 to 04, when I was managing fixed income fund, we outperformed every equity fund. We delivered better return than Prashant Jain. We delivered better return than Samir Arora. We delivered better return than every equity fund manager. And consequently, Templeton became the second largest asset management company in India. 96, they were zero. 2004, we were 14,000 crore, second largest, behind Unit Trust of India. It was all because of our fixed income fund performance. And in 2003 end, I went to Templeton CEO and said, "Ab fixed income ka run khatam, and our funds won't be able to deliver kind of return which investors are expecting, and we should return the money. We should go and warn people कि अब fixed income में invest नहीं करना चाहिए." I thought he'll fire me, saying that तू अपने ही पाँव पे कुल्हाड़ी मार रहा है. And he said, "Can you explain why you are saying?" And I showed him that 10-year yield had come down from 14% to 5%. अब नीचे जाने की जगह नहीं थी, ऊपर ही जा सकती थी. So our returns will come down. And he said, "Go ahead, you can warn the customers and we can try to return the money as much as possible." client first was the philosophy we learned at Templeton. When I came to ICICI Prudential, we were running Saibal by Infrastructure Fund. It was the best performing infrastructure fund. And one of our competitor in September 2007 launched a close-ended infrastructure fund and raised 4,000-5,000 crore. My ICICI salespeople came saying that Nilesh bhai, infrastructure fund launch karte hain, 10,000 crore raise karenge. And I said, nahi bhai, yahan pe paisa nahi raise karna hai. They went to Nimesh. Nimesh said, sure, launch karte, but please convince Nilesh. He let go 10,000 crore flow because his investment team believed that was not the right time. And from September 7 till May 08, we didn't launch a fund. In May 08, we did launch ICICI Focused Fund. It went after listing to below NAV. I think it fell 30% by October 08 because we deployed all money by June, July. But today, that fund is doing exceptionally well. ICICI Prudential culture was also client first, which was Templeton culture. तो इसमें कोई देसी नहीं है, कोई विदेशी नहीं है. It is all about values and system. And I was lucky that my bosses were supporting those culture.
Wonderful. So, I mean, just to share with you, we work very closely with Nilesh bhai in our company WealthApp. I think for last 10 years, Nilesh bhai has been addressing our clients earlier in Kolkata, now in Bombay. And in every year, Nilesh bhai gives some ideas and which remarkably becomes accurate. So when 2026 budget, everybody was apprehending there would be some change in capital gain. You are one rare voice who said there may not be. So how do you predict so accurately, Nilesh bhai?
So do we go wrong far more times than we go right? But at the end of the day, as a fund manager, you invest based on your conviction. You take a view, you do go wrong, but you still take a view. And on this capital gains in budget, our view was very clear. We should have stable policy, not a policy which is like ECG cardiogram. And I was hoping that government will prefer stability over change.
Wonderful. So, Nilesh bhai, I have just last 2-3 questions. I know you are very pressed for time. So, your role as an advisory council member to PM, without breaching any confidence, when you look at policymakers worry about what market worry about, I mean, how do you balance your role between South Block and Dalal Street?
So to me, you know, I always remember this episode from Ramayana when Ram Bhagwan was building Setu to Lanka. He was taking help of monkeys, bears. They were bringing giant boulders, giant stone. And then there were squirrels who were bringing small stone. And the monkeys and the bears complained to Ram Bhagwan कि ये squirrel को आप ना बोल दीजिए, इतने छोटे छोटे पत्थर लाते हैं, क्या फर्क पड़ेगा? And more importantly, अगर हमारे पाँव के बीच में आ गई तो मर जाएंगे. And Ram Bhagwan said कि नहीं, हर कोई अपनी क्षमता के अनुसार contribution कर सके. मोदी जी एक विकसित भारत का सेतु बांध रहे हैं. I am not a bear who can bring a giant stone. I am a squirrel. I have to contribute as per my capability. तो जब वहाँ पे बैठते हैं तो we contribute as per our capability. जब अपनी ऑफिस में आते हैं तो अपना काम करते हैं. वो दोनों अलग-अलग चीजें हैं.
Okay, and finally, my last question, Nilesh bhai, you started from scratch. I mean, your journey. I mean, I think a biopic should be made someday. You know, from a absolutely ordinary background. Because of your extraordinary education, merit, you have built institution after institution. So let's say if you write a book, or if I have a wealth app management trainee attending this session, what would be your journey if you need to summarize in, let's say, in say 10, 15 sentences, that how have you done, not as a fund manager, not as an MD, but as a common man, as an ordinary Indian citizen? How do you explain your journey and inspire a 25-year-old who's starting his journey in the BFSI industry?
So we are all beneficiary of rising tide. If I was born 10 years before when I was born, maybe my journey would have been different. We all are benefiting because of 1991 liberalization. We are all benefiting because we worked in organization which supported us. And to all the listeners, I will repeat what Mr. Uday Kotak told me when I joined Kotak Mutual Fund. You have 2x2 boxes. The first box is of Bhagwan Ram. In his entire life, in his entire journey, Ram Bhagwan's goal and the means of achieving those goals, they were always righteous. He never compromised on goal, never compromised on the means to achieve those goals. In your career, many decisions will have to be taken. Try to be in the Ram Bhagwan box. The second box is Krishna Bhagwan. He always worked for righteous goal. But sometimes the means to achieve those goals were little bit stretched. To win the war of Mahabharata, it was important that Karna was killed. When he was trying to lift the wheel of his chariot, Krishna Bhagwan tells Arjun, just kill him. He didn't say that he is your elder brother and don't kill him. So sometimes because we are in business, we are in Kali Yuga, we have to take decisions which are stretched. But the goal should always be righteous. The third box is of Duryodhan. Duryodhan focused so much on process that he forgot about the goal. When he was fighting for his life at the end of the battle, he didn't hit Bhimsen below the belt. He played Gada Yudh as per the rules. But why was he fighting that war? Completely adharma. Never ever become Duryodhan, where you are focused so much on the means that you forgot the goal itself. And the fourth box is Ravan. Na goal ka ठिकाना, na process ka ठिकाना. Never ever be in that box. So in your career, whenever you have to take a decision, almost always try to be in Ram box. Good goals, good processes. Sometimes Krishna box, but never in Duryodhan and Ravan box.
Wonderful. I mean, you, nobody, I think, can make it so simple. I mean, some of you may think the example is slightly far-fetched, but we know about Ramakrishna Paramahansadev, who was the guru of Swami Vivekananda. His USP, one of, if I may say in today's parlance, was that he could explain the most complex philosophy of life through very simple examples. And Nilesh Bhai also does that for our financial world. So we are at the end of the conversation. Ladies and gentlemen, I mean, Nilesh Bhai deserves a thunderous round of applause. When I was told that I would have this privilege, I couldn't believe my luck. And I know Nilesh Bhai's schedule, last moment, there are changes. He is being called to Delhi. So I was really keeping my fingers crossed, was checking with Poonam and the team that And she told me yesterday, sir, boarding pass issue ho gaya. Aap, you don't tense anymore. So Nilesh bhai, thank you so much on behalf of Wealth App, on behalf of Indian Chamber of Commerce. It is our sheer pleasure and privilege to have you with us. Thank you.
Thank you.
Thank you so much, sir. It's actually a privilege and honor to have you here. And I think on behalf of the audience, I may take the liberty of, commenting one thing, ki dil abhi bhara nahi. It could have gone on for such a long time. And referring to Anindo's conversation with Poonam, I did one smart thing. I never had the guts to ask whether it is on. So I very smartly asked, when are you reaching the venue? But thank you so much, sir. May I request Mr. Atanu Sen, our BFSI committee chairman, to kindly come forward and felicitate Mr. Nilesh Shah first. May I request Mr. Sen to kindly felicitate Mr. Anindo Pal Choudhury also? Can we have a group photograph, please? So thank you once again, and sir, it will be a pleasure to have you back with us again, sir. I'm telling you, it will be a pleasure to have you back with us again, sir. Maybe for a longer period, one half session with you, sir. Thank you so much, sir. Thank you so much. I've asked for a bag. Without wasting any more time, we go to our next panel. A very interesting topic, the Global Gateway Gift City International Diversification and AIF. Can we have the table set up very fast? May I request Mr. Atanu Sen, our BFSI committee chairman, who is the moderator of the panel, to kindly come forward. I'll now request the speakers, Mr. Saurabh Bhatia, investment specialist and head products, SBI Mutual Fund, to kindly join Mr. Sen. Mr. Kulbhushan Singh from Marcellus Investment Private Limited, Client Advisory and Relationships. Mr. Vijay Darak, Director, Credential Asset Management Private Limited. Mr. Ankit Agarwal, Fund Manager for Equity Component, Motilal Oswal Asset Management Company Limited. So over to you, sir.
Thank you. After the fireside chat, I hope everybody will be awake. We have a discussion on the global gateway gift city, leveraging India's offshore hub to provide global standards for Indian and international investors. We have speakers who are doyens, who understand the mutual fund industry as well as the investment scenario in the country. In fact, we have Ankit Agarwal. Ankit is actually heading Motilal Oswal AMC, which has a strong equity research pedigree and has been among the early movers in international fund offerings and also portfolio management services and AIF structures. Mr. Saurabh Bhatia, he is an investment specialist and head products of SBI Mutual Fund. In fact, SBI MF is, of course, the largest AMC in India with a significant institutional and government-affiliated investor base. We have with us also, in fact, we don't have with us Mr. Pramod Gubbi. In his place, I think Mr. Kulbhushan Singh is here. Anyway, Mr. Kulbhushan Singh represents Marcellus Investment. Marcellus is a boutique investment manager known for its concentrated high conviction equity strategies and a strong international institutional following. Mr. Vijay Darak. Mr. Vijay Darak is the founder and fund manager of Credential Advisory Group, Credential India Realty Fund.
Sir, just 1 second, sir. Mr. Anindo Sengupta, Executive Vice President, Zonal Head, UTI. I missed out his name. I'm so sorry. Please join us on the seat, sir. I put your name board.
Oh, I was just wondering what happened to my left wing.
Please continue, sir.
Welcome, Anindo. Anindo is Zonal Head of UTI Asset Management Company Limited. Of course, UTI is the oldest and the most trusted fund house, with a deep-rooted presence across geographies, including Tier 2 and Tier 3 markets, and a strong institutional and retail franchise. He is a zonal head here, and he looks after the distribution strategy. In fact, in the morning session, I mentioned in my address regarding what is GIFT City. I think I would, at the cost of repetition, maybe mention a few points. What is GIFT City, so that to set the context. GIFT City, actually, all of you may be knowing, is situated near Gandhinagar in near Ahmedabad. And I was fortunate enough to be there only about a month back for a few days, looking after its infrastructure. It's a free trade zone with various tax incentives, and it's fully integrated with best-in-class infrastructure. Why I say best-in-class infrastructure? The infrastructure has come out remarkably well with not only the offices, the structures that are there, the other requirements for a city is all in place. You speak about hotels, you speak about schools, international schools, hotels, five-star hotels, and located so well. In fact, already we have the railways coming here. The bullet train station is already there. It's right there, and it's also in the connecting the highway, the corridor between Bombay, Ahmedabad, and Delhi. So it's right there. It has, stock exchange in Gift City have achieved, as I was mentioning, volumes, very, very high volumes of US dollar 25 billion and more in a single day. And we are looking forward to it becoming a very significant global financial center. It's a unified regulator. In fact, the regulator, that is IFSCA, that's the International Financial Service Center Authority, it looks after, and it's a regulator. It's kind of a super regulator of SEBI, RBI, insurance regulator, and PFRDA. So IFSC unit is a non-resident under exchange control, deals in freely convertible foreign exchange. So many banks are there. In fact, there was an international bank, and I was inquiring about its headcount, and I was told that it has about 10,000 people working there in a particular bank, an international bank. Of course, the Indian banks are there, be it Bank of Baroda or State Bank of India and others. Insurance company, 52 of them are there. Leasing companies doing in aircraft leasing, ship leasing, and everything, as well as fund management. It is a SEZ. SEZ is a portion there, along with the domestic tariff area, and of course the IFSC area. No stamp duty, state subsidy duties as per the Gujarat GCC policies. These are the ones. If I am mistaken, you may correct me as we go along. So I've been given a brief outline of what is a gift city. First, I will go to Ankit. Ankit, in fact, conviction is when sentiment dominates, in phases where price action is driven more by narratives, what's taking place, than earnings. So, what decision rules help you maintain conviction through sharp drawdowns, and what specific signals tell you it's time to recalibrate rather than hold the line?
Thanks, Tanu. Thanks for that question. I think in investing, you have to sort of differentiate between price action or, what is the reason why you purchased a given security, right? And you have to sort of distinguish between price coming down versus your thesis changing, right? And therefore, if your reason for buying a given security is built on a fundamental thesis, what you just need to do when price corrects is whether that thesis still holds or not. And I think our focus in a scenario where narratives are sort of overblown or price action is going against your sort of investment hypothesis would be to go and go back to basics and recheck your investment hypothesis. Has there anything which has changed? And in order to do that, maybe you will have to do a little bit more, kicking the tires, looking under the rocks, talking to more people, that company interacts with, talking to their supply chain, etc. And at least then, you can test out whether your hypothesis still holds or if there is a change. If there is a change in your hypothesis, then whatever be the price action, you need to take an action. But if your hypothesis remains the same, that actually helps you continue with your conviction and hold on to your security even in the face of a drawdown. I think beyond the hypothesis, I think as a portfolio manager, the other tool that you have is position sizing. And I think that's where a little bit of risk management would come into play, that there are a lot of unknowns in the market, and you can't factor in everything, and there could be some information that's not available to you. And that's how you sort of, by sizing that position appropriately, is what is the risk you're willing to take. And that's how you can sort of manage risk in the portfolio.
Thank you, Ankit. Thank you, Ankit. I mean, in fact, your global experience and your journey includes global exposure through roles at Lehman Brothers London, as well as BNP Paribas Hong Kong, and also the proprietary trading systems of DE Shaw. So I think your answer actually captures your experience. Having said that, Mr. Bhatia, on my right, see, as a SBI MF operates at a very large scale and with a stakeholder complexity that few AMCs face. So when it comes to launching alternative products like structured credit and private market AIFs, how do you balance innovation with the institutional conservatism of SBI that your brand and investor base demand?
First of all, it's always an honor to be moderated by you, Mr. Sen. So, yeah, good afternoon, everyone. Firstly, in context to navigating the size or scale at what we operate, I'll make you remember an important line of a very famous movie. With great power comes great responsibility. And to a large extent, the organization I represent, State Bank of India, as a brand, embodies that in a big way. Secondly, any large financial institution or any ingrained financial institution of any democracy or any large economy largely is a reflective to which way the economy is spearheading. In Indian context, just we've got too soon discussing the AIFs or the alternate space over the last 5-6 years. But when Mr. Sen was almost my age, I'm pretty sure he would be not even looking at these things because so easily the fixed income So fixed income was earning close to double-digit returns. And it is this hard-earned macro stability today, which is giving us a fair bit of comfort that my cost and availability of money as an economy will stay benign for a prolonged period of time. And that has seeded or given birth for this industry to grow the way it is growing. So often we curse that there is, for the extent of volatility, extent of flows, why don't we put in some measures? But it is these phases which help us. The cost or all the hard work what we have put in getting this macro stability right. And hence we have this new product category. And I still call new. This has started making a lot of noise over the last 5-6 years. And one thing which is easy to relate is this last 10 years when we can say that my cost of money and availability of money from a system is a lot more favorable. The second part which Mr. Sen asked was the innovation. It's important to draw a line between innovation and creativity. And from an innovation standpoint, as manufacturers of product, our primary responsibility is to address solution. The journey from double-digit or very high single-digit fixed income to large caps, to mid and small caps, and now into an unlisted space. This entire journey has been growing with the help of incrementally solving different problems in a very nuanced way. So as a product, what comes in is, as my listed markets have a lot more maturity and they have demonstrated fair bit of penetration, this helps the second and third layer, which is growth stage companies or early stage companies and the startups to identify themselves as a part of economy, which India was not so much known maybe 20 years back. When we started our careers, we were often told that India is a capital-starved economy, which is not the case today to the same extent. And this This upgrade, what we have got, comes through for entrepreneurs across different layers in the form of the alternate space, where without going through the nuances and, if I can say, restrictions at a very early stage as a listed company or not getting access to capital, this pool of capital becomes available to them. And now with advent of GIFT, we have more doors open to access global capital, as well as provide global capital at a relatively a lot more ease. So the innovation side for us gets confined to what solution we are addressing. And trust me, the way economies are evolving at this rapid pace, at every nook and corner, there is a new problem to be solved. And one of the instrument which is aiding the new age entrepreneurs, as well as very entrenched industrialists to look at other segments beyond their core activity, is where the AIFs come into play. To what we do, we just, from an SBI context, through this AIF, we put scale to scale, and that's a work in progress.
Before I move on, I think a counter question to you. See, you have served senior roles in different, like HSBC Asset Management, ICICI Bank, and DSP BlackRock Mutual Fund. Now you are with SBI, and you were, I mentioned about institutional conservatism in SBI. So in these different roles in an international fund house or an Indian private sector fund house or in SBI where conservatism is more, in brief, can you just explain, is there any difference or everything is the same?
Well, let me put it in a perspective which all of us relate. When we say conservatism is from a risk profile perspective, for example, if I'm running a small cap fund, I can't call I'm a conservative small cap fund. And same way, the conservatism comes largely as part of my responsibility to get the hierarchy where I'm selling the right product in a right way with the right narrative. And that becomes very important from a fiduciary standpoint. So the conservatism, thanks to the tight jacketing by the regulator, enables an entity of our scale or a relatively new entity coming into the fray to get identified with that particular product line where it should belong to. The conservatism outside of listed space comes in spaces like private credit, where we need to be a little bit more hand-holding in the way we scale that business to a large extent. And when I say we, is not only about SBI, but we as large part of an industry on how we manufacture and how we narrate or how we place this from a client perspective.
Wonderful. Kulbhushan, see, Marcellus entered GIFT City relatively early, if I understand, yeah. What convinced you or your company that global investing through IFSC structures was going to become, very, very important, strategically important for Indian investors?
Ji. So when we speak with the external stakeholders, we often say that we are in GIFT City since the time wahan 4 dukaan aur 40 gaye thi. So effectively, that was the state when we had started. And since then, it has been a remarkable journey for the GIFT City, still evolving, still growing. What we saw early was that government is fully backing it. And when IFSCA became a unified regulator there, the writing was clearly on the wall. When I look at it from a business or investor need standpoint, Indian investors, whether it is HNIs or retail investors, they are very underexposed to global equities. And here we were offered a route through which we can give a regulated offerings to our investors to invest in external economies. So That's where we decided to go out, get licenses, hire a team which can do justice to the task given to us. And since then, it has been a phenomenal journey for us.
GIFT City is really coming out well. In fact, if I may turn to Mr. Darak, you bring over 2 decades of expertise in real estate, debt, structured finance, and project advisory, with remarkable zero delinquency track record across 300 plus real estate projects. So, having said that, since you have achieved financial closure for over 300 real estate projects spanning residential, commercial, hospitality, mixed-use sectors, and more importantly, zero delinquency track record, this is a sector which is actually associated with developer stress and liquidity mismatches. What is the underwriting philosophy that has allowed you to maintain that discipline? And how do you see real estate debt AIFs evolving as a distinct subclass or sub-asset class within India's alternative landscape? 2 questions. Yeah.
Thank you, Mr. Sen. You asked a very good question. So, first reply the first one. See, I have been advisor for a financial closure for more than 300 transactions, and where in fact the underwriting or the credit team is of the lender, but still having a zero delinquency in 300 project finance shows some strength or our USP which we follow. The first thing is we stick to the basics. Like, in lending, the basic financial parameters or the basic principles are the same. Whether you choose a right developer, right kind of a borrower, who has a good reputation, they have an excellent track record, the execution skill is there. तो वो Excel sheet projection और सब कुछ ठीक है, but more than the projection, we rely on the track record of the developer, his execution skills. Then comes to the project, where like we go for a clean land, if there's any litigation or if there are any chances of being trouble coming in the future, so we avoid those kind of the transactions. So basic governance structure are the same, but when it comes to real estate funding, 2 things are very different from a manufacturing project. In a manufacturing project, the financial closure, basically there is the debt and the equity. But in the real estate project, there's a debt, there's equity, then the third element which is very dynamic, that is the pre-sale, advance against booking. In fact, 60-70% of the project cost comes from the pre-sale advance against booking. And that is the most dynamic. Say, अगर एक project बहुत अच्छा sale हो गया और receivables आ भी गए और there is a chance कि अगर वो project के बाहर निकल गए तो there is a issue. I mean, then for completion of the project, there won't be a sufficient receivable cover. And second is, अगर sale अच्छी नहीं आई है, अगर booking अच्छी नहीं है, तो भी problem है because then the promoter has to put more money. The lenders has covenants कि इतना बिक जाना चाहिए, so and so sale should happen. So what we do, like we try to maintain a balance कि there should not be so stringent terms कि a developer cannot even breathe. At the similar, there should not be so what do you call that? So much of the liberty ki, like, there is no checks on the remaining. So we put like such clauses like, cash flow cover, security cover, receivable cover. So those are the parameters which we follow. And second thing, which is very different in the real estate, is the security. The security is perfect till the project doesn't start. The moment project starts, there is a sale. They are the buyers. So what happens in the real estate? Those buyers have got now these buyers become the equal stakeholder. So in a real estate project, enforcement of security, though on paper looks very good, but practically is very difficult. It's like that कि अगर शादी हो गई है, 3 बच्चे हो गए, अब अगर डिवोर्स होगा तो बच्चों के साथ ही होगा. तो उस प्रोजेक्ट में अगर 100 फ्लैट ओनर्स ने परचेज कर लिया, 100 एग्रीमेंट बन गए, अब रिजोल्यूशन तभी होगा कि उस प्रोजेक्ट में प्रॉफिटेबिलिटी है. नया डेवलपर अदरवाइज नहीं, अगर देयर इज ए स्ट्रेस, तो नया डेवलपर उस प्रोजेक्ट में अगर प्रॉफिटेबिलिटी नहीं है तो नहीं आएगा, तब लेंडर को हेयरकट लेना पड़ेगा. So constant monitoring is required in a real estate project. So this was regarding the first question. And your second question was regarding the alternative space, the AIF. Okay. So see, AIF is a very happening thing. I think now, if under assets under management in the AIF is more than 10 lakh crore, and the mutual fund is around 80 lakh crores. So now it's roughly 10% money is with the AIF. And when it comes to the debt fund, or again in the debt fund, there will be a substantial share. Again, in a debt fund, there's a lot of classes. So one of the classes is the real estate. So what happens in a debt fund, my investors' expectation is like, they require a 15-16% kind of a ROI. So those kind of ROI can come either from a special situation fund who fund the stress projects, or it can come from a real estate project where you fund for a land acquisition. So my strength is not funding the stress projects or a special situation. My strength is basically partnering with the good developers where we can fund them for a land acquisition. So, Mr. Sen, you will find very funny that the same developer who's negotiating with us for 8% rate for a LRD or for a project finance in the morning, and after 1 hour is again negotiating with us for 18% rate for a land acquisition. So, real estate is the only sector where 8% में भी lending होती है. With the same developer, you can even lend at 18%. So, again, what will happen in the AIF, in the real estate space, there will be further subclasses. Somebody is focused on the last mile funding. That is generally for a stress developers. Somebody is focused on the lease rented deals, and someone like me who's focusing on the land acquisition or for the pre-approvals. Thank you.
Thank you. And in fact, now I'll move to Anindo. Anindo, of course, is a seasoned industry veteran with more than 30 years of diverse experience. He has worked not only with UTI, but also with HSBC, ICICI Bank, and others. Anindo, my question to you is about distribution readiness for global products. See, UTI has one of the widest distribution footprints in the country, and it's reaching investors across metro, semi-urban, rural geographies. Now we have this GIFT City. Now, GIFT City products, feeder funds, offshore AIFs are inherently complex and today largely the domain of HNIs and ultra HNIs. So from a zonal distribution perspective, what is the realistic demand signal you are seeing on the ground? And is the GIFT City conversation happening beyond the top 10 cities in India?
Yeah, that's a very, very nice question, because when I represent any formal meetings on behalf of UTI, the first question I face and first question I have been asked on distribution. And first of all, I thank ICC for this invitation that I have been here within this eminent personalities on the stage. Sir, let me put across my thoughts in very candid terms. These GIFT City products and the sophisticated products today is not only the part of the niche community. With the evolved situation presently, and whether the wealth creation is going to the next level and the industry is going to the next level, it has started to be the part of the asset allocation process. The most important thing in UTI, we are present in 255 centers across India, and within each 55 centers in East. And what I find across is that not only, this top 5 cities or top 6 cities in India or in East, and the top cities of East, people across the B30 locations have started speaking about the niche product. As I have told you in my first said this, it has started to be a part of the asset allocation. What I mean by that, I'm just give you an example. UTI has an AIF, and 18 months back only, we have got the AIF application from a place like Hooghly, forget about Calcutta, in a place like Hooghly or a Bankura or a place like Tinsukia, which is a very distant corner of the country. So now, what I am trying to say is that the investors who have not only niche or not only the top 5 or the top 10 cities, top 5 cities, the investors have already started speaking about AIF. AIF AUM has been going up. At the same time, beyond that, they are not only seeking information, they have started investing into it. And we have been, as UTI, as a part of this total process, we have been able to help them invest in, because through our, not only through our network, through our research process, and through our efficient way of how do I channelize the investor education. The distribution fraternity has a very strong and a very important responsibility towards that. Today, when the entire population is actually looking for such kind of a products, we need to go speak to them on the right angle, and not only speak to them on the right angle, but at the same time, what is the kind of tax structures coming up? What is the kind of complication in the product coming up? What is the kind of challenges that might face? We need to educate them. And I am telling you this, that has been happening, and we have been seeing a lot of people who have been engaging in the journey. And we in UTI, we have very strong connections at the ground level. We are present in the 55 centers in the B30 locations. Calcutta, we have around 3 offices. And apart from Calcutta, these 52 locations are in the deep rooted pocket. So the GIFT City and the GIFT City for products are a part of this entire wealth creation process. And we, as an organization, 63-year-old organization, who have actually, as I've told, that you have been from SBI, that kisne sikhai investment ki bhasha. So, I mean, that's the way we have been taking it forward.
I'm sure UTI as a brand will be able to, do justice and make the penetration. Ankit, see, the present market risk, you look at today's setup, valuations, liquidity, macro cross currents, we have been discussing about it in the other sessions also. What are the 1 or 2 risks you think are most underpriced by the market, and how are you expressing or hedging them in the portfolio?
I think, to be fair, the most underpriced risks are the ones which we never know about. It's the unknown unknowns, which, as fund managers, we can't really price them. But I think one of the factors which probably, one needs to be cautious about is, what are the medium-term effects of what's happening with respect to crude and currency today? And, what effect will it have, or a trickle-down effect it will have on inflation and therefore interest rates in the economy. And I think that's the broader macro context, in which one should be sort of planning their portfolios and investment strategy. I think globally the yields would, could probably continue to move up, and therefore investments which are levered, or where we are seeing a lot of leverage driving investments, I think those will be the areas one needs to be a bit more cautious about. And in our sort of investment framework also, as of today, we are sort of pricing in, or when we are making our investments and looking at the risk sort of within the portfolio, I think rise in interest rates or higher inflation maybe in the second half is something we are sort of accounting for when we are making our investment decisions.
Thanks. Sure. Saurabh, I think AIFs, the question is on AIFs. AIFs are increasingly moving into the structured credit and private market assets. From a product design perspective, how do you construct a structured credit AIF that generally delivers non-correlated returns and not just lower liquidity with similar risks, underlying risks?
Thanks to AIF, the liquidity risk is at some distance. I think when we talk from a structured credit perspective and creating a product around it, most important part from a credit risk perspective is it's a very layman perspective or a thumb rule. For credit to turn good, you need positive growth momentum and lower cost of money. Not always you will have both these things working in tandem, and that means that a clear line needs to be drawn as a product idea with a horizon which is much, much longer. If the outlook from a wealth creation is not very positive, then the outlook from a low-rated, high-yielding credit cannot be positive to that extent. And hence, again, a line needs to be drawn between no matter how good it is looking, but ye he versus ye bhi. This is a classic AIF and especially credit is a ye bhi criteria, which if the world order operates well, if the cost and availability of money is favorable, if you have a positive growth momentum and lower cost of money, your credits will start giving or delivering their purpose. In the land of football, easier anecdote would be you'll always need to have a goalless match for this, because for a goalie, no matter how many saves he has done, but he'll always be cursed for that 1 or 2 goals what he has given away. And hence, from structuring perspective, very important is when we meet, the biggest differential when curating an AIF is we are not lenders, but we are investors. As a bank, the way they lend, and as an AIF, the way I invest, these two terminologies, their understandings and their purpose are extremely different. One is backed by capital and one is backed by a fair amount of skill without so much of capital. So drawing that line between lending and investing is the first principle and first port of call. In a structured credit, we easily say 12%, 14%, 15%. I mean, as the number goes up, largely, and trust me, largely we are pricing the intent of the promoter rather than the numbers behind them. So again, coming from SBI context, these are skills which we are identified with, and it is these bits which go into putting these products in place, and most importantly, aligning them with that narrow base of investors which identify with this risk and volatility appetite.
Better to be conservative and realistic rather than.
Again, I'll not err on the conservative side. If somebody's coming here, he's not conservative. So I'll not tag him from a conservative perspective, but definitely be realistic.
Kulbhushan, a lot of talk these days, or a lot of firms talk about global diversification. So what does actually managing global portfolios require that is different from domestic investing?
Well, this is there are differences also, and there are some things which remain non-negotiable and same all across, whether you're investing in India, abroad, anywhere. So the soul remains that you invest in good quality, clean companies. You look at the business growth, how it is happening. You look at the reinvest rate opportunity. That remains the soul of it. Where shape changes, you need to price in the currency risk which is coming in. You have to look at different geographies and whether the sector alignments are happening with emerging markets or not. One example, if I can give, there was a conversation we were happening with a Japan-based firm, and in spite of the translator, there were some nuances which were still getting missed in. So when we are saying that we are looking at investing globally, it's not always about that, run an ETF and then it can be done. At our end, it is all bottom-up stock selection, bottom-up research. So yes, the shape differs. The soul at our end, we think remains same, investing across. And I'll just take a second to second what Anindya said, that in terms of the reach which AIFs are now having, I think one limiting factor always was the ticket size. That, okay, 1.5 CR probably is limiting to fewer investors. But the advantage of GIFT City is coming in play here as well. When the retail structure can invest in as little as 5 lakh also. So that's a good sign.
Anindo, let me come to you before I move on. See, UTI, carries currency risk, investors' education. I'm coming from that. The currency risk, geo risk, cross-border regulatory nuances. They are real barriers for Indian investors considering international funds. As someone, or as UTI, who engages with investors and distributors, as you were rightly mentioning, across a large region, not only in Tier 10 or Tier 5 cities, across, how do you approach the education and suitability conversation for these products? Because education, literacy, we have been discussing right from the morning. How do you do it? And that is the crux, that is the pain point.
It's a very interesting
Yeah,
question.
what would you meaningfully move the needle in making global diversification a mainstream allocation rather than a niche one?
Yeah, it's a very interesting question. I will answer the question in two parts. I'll first start with answering is that we have a 63-year legacy as an organization. 1963, 2026. This is one part. The second part of it is that we have UTI International, which is present in 8 different countries. And we have investors in 65 different countries. We also have UTI alternates. We have UTI pension funds. There's a diversification. So now, as an organization which is 63-year-old, we are built upon not only strong processes with a mindset of achieving certain goals, as a result of which the number of investors that we do have today is one of the highest in Indian total structure. Now, sir, as I have told you, we have 255 offices in India, and within that 255 offices, only 55 offices are in East, and the remaining 195 offices are spread across throughout the country. Now, while I say investor education, I was speaking to somebody during the lunchtime. This investor education doesn't mean in one concrete time anything. So today, if you want to give an investor education about a particular product in Alipur in Calcutta, and the same investor education you would like to give it in Siliguri, and the third investor education you want to give it in run into Aizawl, it should be 2-3 different structures, because the total demographic pattern of the 3 different places are 3 different. And today, it is not that. In a place like Alipur, everybody invests in complicated products, and it is not in Aizawl that people are not interested about complicated products. So everywhere, the investor education, and having been a very strong process-oriented, research-driven, and a very strong legacy background, and we at the organization, we have a very strong background. Before 1992, we are there, and who have educated the people to come into mutual fund, democratize actually the mutual fund, and the first scheme was UTI Master Share. So we have a very strong structure through which we can take the complicated financial products, which is in Gift City, and coming forward to develop the market in that way across India. So that structure we have, and we have already developed it, and we are working on that.
That's great. Dara, in fact, Credential operates as a focused specialist fund manager in a segment where large institutional players are also making inroads. So what is the edge of a boutique real estate debt fund manager? Is it market intelligence or local market intelligence, relationship depth, or the agility to underwrite deals with larger platforms, which the larger platforms pass on? And where do you see consolidation or differentiation playing out in India's real estate AI space over the next few years?
Thank you, sir. Very good question. See, the larger institutions have entered the space. They are there, and they bring a lot of reputation to the sector. In fact, the sector has been formalized because of them. And they have a good governance structure. Transparency is there. But at the same time, they have certain challenges. Those larger institutions may have access to cheaper capital. They've got access to overseas capital. If my investor expectation is 15-16%, their investors' expectation may be even 9-10% because they're assessing the global capital. But when it comes to deployment in real estate, so even sometimes they may go for a larger deals for a bigger developers, but again, there are also challenges. Like if you see over a decade in any city, there's a change in the top 10 developers. So जो 2015 में जो कलकत्ता में या मुंबई में जो top 10 developers थे, 2025 में at least 30% of them has wiped out. There has come the new developers. So even bigger developers are also prone to failures. So now coming to us like a boutique fund like us, my fund size is 500 crore and my ticket size is around 50-60 crores, which I can invest with a portfolio company. So there is a good demand for this kind of a product. So what we believe, the developer should be large enough, but doesn't need to be a very top player. But they should have a financial discipline should be there. There should be sufficient ongoing projects where there is alternative cash flow. अगर एक project में कहीं दिक्कत आ रही है तो उसके पास में group cash flow होना चाहिए. So these are the things. So there will be a space for boutique investment managers like me, and there will be a space for large institutions also. And your second question is where this AIP space is. Okay. So see, this is a very fantastic space. I mean, this sector is growing like anything, and the more the sector is getting more institutionalized. Even the good thing is that investors, our investors are also now institutionalized in the mindset. They could be the HNIs or family office, but the way they carry themselves is the way they, understand where they are putting money, what kind of is like how the downside risk is protected. The questions which I am facing, I face from the HNIs or family offices, that shows they are very learned and they know what kind of risk they are getting exposed to. So this sector is, AIF is the new thing. It's going to grow fantastically.
Because of paucity of time, and I found Shantan also looking at me from a distance. In fact, let us, excellent nuggets, excellent, insights we are getting. So let us have a rapid round, maybe a sentence or two from each of the speakers. I'll start with Dharat. One regulatory change you would implement tomorrow to accelerate India's position as a global fund management hub.
Okay.
One change.
Yeah. So I think the one change could be with respect to the tax perspective, and it could be also respect to the onboarding experience. Like, the onboarding of the overseas investors should be simplified.
Okay, onboarding simplification. That is the one change they're looking for. Ankit?
Maybe from an equities perspective, I would say, remove sectoral caps so that, more in some of the sectors where we do have sectoral caps, I think government should sort of just, let go of them and, let capital come freely into the country.
Removing sectoral caps. Okay. What about you, Anindo?
So I think enough changes and time to time it has been taken care of by the regulator, both from the SEBI perspective and the Reserve Bank of India perspective. So I think we are in the right track. So I don't see that at this point of time too many changes are needed at all.
Not too many changes, no more change?
No, I'm not saying no more change.
Okay.
Whatever is that, let people absorb it.
Okay.
Take it forward.
Okay,
so that's
let
my
people
feeling.
absorb it. Saurabh?
Godspeed to Gift City. Like every kid believes, मैं जल्दी बड़ा हो जाऊं. I hope Gift also believes that way, कि मैं जल्दी बड़ा हो जाऊं.
Okay. But Gift City, asking you about Gift City, will it find its place with, Dubai? Okay, Dubai is facing headwinds now because of geopolitical reasons, Singapore and others. How do you see Gift City evolving in the next few years?
Well, if we are moving away from globalization, on the same extent, I think we are blurring boundaries on money to move across geographies. So, if goods become a little become difficult to export, and economies are trying to become a lot more self-dependent, then at least from a financial market perspective, which I can call like a digital inventory, that can move a lot more freely. And that's where I think GIFT will play a very large role in upscaling itself. And one answer you yourself gave for this question, if one large economy or one large geography is facing headwinds, at least the substitute is ready.
Yeah, okay, great. In fact, this is one recommendation I made to the regulator there. Okay, Kulbhushan, what's your take? One.
So while a lot has been covered, I'll simply say लोगों की जिंदगी आसान करो. Start with KYC. Go. maybe taxation.
Thank you. Thank.
Just, sir, I will just like to add one point. Just a follow-up thing. Very simple thing. Recently, it has been proposed that salary can be given in mutual fund units. That itself is a very big change and the game changer that can come in the system if we can absorb it. And a portion of the salary can be paid in the mutual fund units. I've gone through that's been proposed. So if that can be, slowly absorbed, then the actual democratization of mutual fund and the financial literacy coming across the different part of the country can be accentuated. That's my very important take.
That's a very important thought. And what would be the appetite for it? That also needs to be looked at, In fact, thank you, Kulbhushan, Saurav, Anindo, Ankit, and Tarak. It was excellent. Absolutely. I was honored to have all of you here to understand and, get an understanding of what is GIFT City and how it may play a role as we move forward. Also, different views on AIFs and also how to democratize it and make an inroad. Thank you, everybody.
Thank you so much, all the esteemed panelists. I now request Mr. Atanu Sen to kindly felicitate our esteemed panelists, starting with Mr. Saurabh Bhatia, Investment Specialist and Head Products, SBI Mutual Fund.
Yesterday. I'm trying to get into the main crowd.
Mr. Anindo Sengupta, Executive Vice President and Zonal Head, East UTI Mutual Fund. Mr. Ankit Agarwal, Fund Manager for Equity Component, Motilal Oswal Asset Management Company. Mr. Vijay Darak,
Yesterday. I'm trying to get into the main crowd.
Mr. Vijay Darak, Director, Credential Asset Management Private Limited.
Yesterday.
And
I'm trying to get into the main crowd.
Mr. Kulbhushan Singh, Chief Advisory and Relationships,
is facing in India. And if I have to just quickly list them down, would be creating alpha for the clients, how to imbibe technology, and how to remain aware and conscious of the cyber frauds that are taking place every other day. So with such an experienced and well-researched panelists along with me, I'll take absolutely no more minute to go straight to Rajesh Nambiar. Rajesh is the co-business head of 361, one of the most respected private banking organizations of India. So Rajesh, while I know the values that your team brings to the table, and you have been one of the trendsetters for last 15 years, I would like to understand from you when, client portfolios or PMS strategies in the short term are unable to manage alpha over underlying passive benchmarks. How do you manage client expectations?
Thank you for that, and thank you for the introduction, Shomajit. Am I audible? Lovely. So, alpha is not a matter of luck, right? It's born out of process, and it's not always present, but there are, to our mind, some ways to predict how a strategy is likely to do in the long run. And how do you do that? You do that by looking at the process which the fund manager speaks of, and whether they're actually able to explain their actions through the lens of that process. So in a lot of past history of short-term winners in the investment management business, what you would find is that even when they're doing exceptionally well or are able to beat the markets, they are not able to actually articulate why they did what they did and how they arrived at the outcomes that gave them some perceptible alpha for a short period of time. So what we really look at, the 361 process, is to understand what the manager wants to do, and to check if they are able to articulate why they took each decision that they took in the portfolio. The outcomes are nothing but a result of the process, which also means that there will be patches in time where performance may not show up. Like, for example, if you run a concentrated 15, 20, 25 stock portfolio, it's not likely to leave the same risk or return signature that a 50 stock or a 500 stock benchmark exhibits over a 1, 2, 3 year period. But if you are an ultra high net worth family who's shooting for large scale compounding over multiple decades, then you will need to cut the noise and actually look at the process and see if that process suits your investment policy. And if the process does suit your investment policy, then you have to sort of have enough conviction coming from the advisor or from the wealth manager to help them go through the difficult patches of performance. So that's the way I think we looked at it. And the third thing is obviously the whole time horizon arbitrage, right? What's the right time frame to look at performance? If you've given money to somebody who espouses a counter-cyclical sort of philosophy, then is it fair to look at them when there is a out-and-out bull market where, to use a very Hindi phrase, "Gadhe ghode sab chalte hai." In that kind of a market, obviously somebody who's sticking to a thesis may not do so well. But that's the time to actually hold hands and sort of take people through that phase of uncertainty. So we've not faced a challenge so far. I think clients have been kind and we've managed to sort of have these conversations reasonably successfully.
Thank you. Thank you so much. Coming to you, Partho. Partho, I've known you for many years, and right for the last almost more than 2 decades, you are just doing private banking, managing the most sophisticated clients in India. So my question to you is that how do you deliver truly personalized wealth management while keeping the model scalable and resilient?
So, Shramati, thanks for this question. I will talk about Systematics. This is a 40 years old organization, predominantly into investment banking and so what we are trying to do is that we are kind of trying to leverage both the expertise. And what we are trying to bring on the table is the, bits and pieces of the both. The research capabilities from the institutional equity and also the, private market capabilities that we run from the investment banking piece. So, yeah. So what I was saying is that I will, what we are trying to do is that we are capturing the capabilities of private market through our investment banking capabilities, and from the institutional equity side, the research capabilities. Now, how we are bringing this to our clients is we run with our own AIF and PMS, and these are run from the wealth management and asset services company. The private markets or pre-IPO things, which we have our insights and we have our expertise for last 40 years. We are leveraging it through the AIF, which we have created, and also various research capabilities for public market things that we are dealing through our PMSs. So this is one way of taking the better things or our expertise to our clients. The other thing which we are doing is that creating a technology augmented advisory service. So what we are doing is that we are creating a centralized advisory process which will run with a model portfolio allocation, sensitizing the portfolio at times on its different movements. Now, the reason behind doing it is to free up the time for my relationship managers or the bankers so that they can focus on more number of clients, and technology can take a lot of load from their hand. Thank you.
Wonderful, wonderful. So now coming to you, Shoibal Ghosh, for last 3 decades almost with HSBC, and currently the head of investments and wealth management. Shoibal, my question is very simple. HSBC is doing wonders when it comes to use of AI in almost every nook and corner, every department of HSBC globally. How are you imbibing the same global technological, volcanic evolution that is happening in India, and especially for your private clients?
Shumaji, thanks for that question. But before I answer that, I want to step back to the earlier conversation on GIFT City. GIFT City is a bit of a passion project for HSBC. We are, I think, the first or second international bank to be licensed inside GIFT City. And Shumaji, we've got a $9.5 billion balance sheet inside GIFT City. So GIFT City is a passion project.
I must tell you something. The only thing I still remember of the GIFT City is the beautiful way Tribes has created your logo that runs continuously around in the middle lawn, which you have to pass every time.
We got a 70 feet billboard there this point in time. So yes,
it's so wonderful.
So GIFT City is very, very passionate project for us. We fundamentally believe that the Indian investors for years have not had an opportunity to earn to participate in 95% of what was happening around the world. Earlier, in fact, in the day, four of us were having a chat, and Rajesh and I were talking about how not being international, not being globally diversified is such a loss for investors. I think GIFT really provides us that platform to be able to get exposed to global opportunities. And as HSBC, Shomujit, one of the advantages that we have is because we are global institution. So we are not just wealth managers, we are investors, we are asset managers, we are institutional investors, we of course a large commercial bank. We basically are participating in the economies where our investors would wish to invest. GIFT City allows us to build feeder opportunities which enable Indians to actually access those high conviction ideas outside of India. Similarly, for global investors, we believe GIFT City is going to be a great gateway to own a slice of India, which otherwise, of course, is not that easily available in other markets. We are very heavily invested in GIFT City. We offer 13 products inside GIFT City, some retail, largely alternate investment funds. So if you're interested in GIFT City, please do reach out to me. Would be happy to help. Now to come to your question on AI. Shomujit, as a group, I think we believe that everybody's slightly behind the AI story. The AI story is really moving fast. We're among the first few global institutions, global financial institutions definitely, who have appointed a global AI officer based out of UK, and under him a very large team which actually is evaluating how AI can make sense. And given the fact that wealth is at the heart of our business, how AI can enable wealth management. Now, specifically to the question on risk, I think any risk which can be evaluated on a spreadsheet can be done by AI a million times better. Any kind of risk that all of us would have imagined the last 20 years of being wealth managers, we would know that all that we have done with all kind of models on a spreadsheet can be done faster. You can obviously evaluate significantly more scenarios. You can come out with nuances which you have not thought of earlier, and personalize. I think what AI really does, it is able to enable the RM to bring ideas which otherwise would have missed his or her attention. I think that is why AI really stands out. But like a traditional wealth manager, banker, I don't know what Rajesh and Parthu would think, but I still think that the human behind that idea is really at the heart of any advice. It is very, very difficult to really get AI to understand necessarily how a person is thinking. And it's the man in the room or the woman in the room who really decides it. To my mind, while AI is able to manage risk, enable predictability, personalize risk, but real outcomes that come out of a risk event is really managed by individuals who take that tool to their customers.
Superb. But I promised you guys a lot of excitement, right? I'm going to flip this 360-degree around and come to you, Rajesh. Even now, when it comes to a client who is ready to write a 25 crore check, where is technology in your firm? Please tell us.
If it's flipped 360 degrees, it has to come to us. Right? So, there is something I tell both clients as well as our banker community at all points in time, which is that clients give money to someone for 3 reasons. The first and the most important reason is you need to like the person you're working with. Everybody underestimates the power of being a likable, amiable person sitting in front of another human being asking for their business or for their money. And our business, which is asking people for an opportunity to manage their personal wealth, which is probably, apart from their family, the most important thing to them, essentially requires you to be somebody who's likable and somebody who you can sit in front of over and over many, many years and probably across generations. That's the first and the most important thing. The second thing is trust. And everybody speaks of it. Everybody speaks of trying to become a trusted advisor. But that process takes time. It will take 2, 3, 4, 5 years just to establish a modicum of trust. And that will largely depend on if you've been transparent, if you've been able to stick to your word. None of us have a magic wand to deliver perfect returns or whatever, are not in line with markets beyond a point. But what you can do is to be very clear about the risks and the opportunities and actually learn to have tough conversations with clients. And I think 95% of the clients that we deal with are entrepreneurs who made anywhere between 100 to 1,000 to maybe a few $1 billion of personal net worth in their lifetimes. And I always say that we are very, very fortunate to be in an industry where you actually get paid to learn from some of the smartest people this country has ever produced, right? It's very rare because you actually get to spend personal time with them. You get to understand how they think, and you get to learn from everything that they've done right or sometimes wrong in their life. So when you get that kind of time, the idea is not to be a yes man all the time, or not to be a salesperson all the time. The idea is to actually be a trusted advisor or a listener. And that, if one were to execute consistently over a period of time, then that should logically earn trust. And the third thing is you need to make money for them, right? After doing all of this, if you still are consistently underperforming or not making money for them, or if you make stupid mistakes which make them lose capital, then the other two has no value beyond a point. So these three things are really important. But as Shaival said, AI can do a lot of, at least the investment management bit, reasonably smartly. So what do? You still need to be the voice of reason, or you need to be able to articulate what the technology is telling you to do in a way that appeals to the human side of the person sitting in front of you, right? Again, I think the one thesis that I've always worked with is that when things go right, you need to have someone to have a celebratory mithai or a drink with. And when things go wrong, you need to have someone to yell at. Until AI manifests itself as a human being or a cyborg and sits in front of the client, hopefully all of us are still required. And especially in things like alternates, where it's not just linear data reading or throwing out just performance benchmarks, right? There's a lot of nuance. There is a lot of information that human networks still throw up about private markets, which are very, very important in the decision making. So till that human in the loop is adding value, I think conventional private banking in the current form will remain the first go-to solution for large families. That's at least our take as of today.
Wonderful, wonderful. So, and Partho, and this is, I understand that, both these gentlemen on my left, they have both covered the AI as the emotional side very, very well. But I want you to tell me, how do you look at generations behaving differently with wealth? Emotionally. So the head of the family might be still asking the secretary to bring the check, signing the check, and the next generation is moving around with a lot of cloud in their hand. But you have to manage both of them. How do you do that?
So this is an interesting thing. If you look at the age demography of India, it is changing significantly. People like us, we started our career in 90s. We have always dealt with so-called definition of people known as baby boomers. And wealth was evolving at that point of time. There were only a certain set of people who used to understand wealth. So we luckily became one of those. And people started believing that, that he's the guy who understands and will guide me through the entire journey. These people have always focused in their business, and they have allowed us to manage their wealth. Over a period of time, we have developed extremely thick relationship with them. And that has resulted into a great relationship. However, at this point of time, we are shifting the age demography. 62% of India's population is moving to age below 35 years. So this generation are extremely well aware of what is happening in today's date. All informations are easily available. They are probably analytically more advanced than many one of us. So it has become all the more important to provide them with accuracy of data, to provide them with right information, and let the decision that they will ultimately take with all the necessary data that you can provide lie with them. So as I was listening to Shoibal and Rajesh, the discussions on AI and technology. Now, AI in today's date is not the thing which will replace the human relationship management. I think the way we need to take AI or embrace AI in our life is, how accurately we can predict an asset allocation. How can we take behavioral finance as a part of risk assessment? How can I cut down on my recency biases and more focus on predictive analysis? These are the things which will give more accuracy towards my advice, conviction towards my advice, because this generation will only look at the truth and what is, proven on the paper.
Wonderful. This is the advantage of having such experience on the same table, that they are actually answering questions that I'm just going to ask them after this. So we are going to skip a few questions because you guys have covered it so nicely. So I'll come straight to you, Shoibal. Just tell us, in terms of cyber maturity, where do you see HSBC India today? And how are you delivering comfort to the largest customers of your bank?
Shumajit, I think we have the advantage of the fact that we are a bank before we were a wealth manager. What that does is that enables us to access frameworks which are applicable to clients' banking level, but enable us to deliver them at a wealth management level as well. And one of the key elements there is the fact that you are guided very strongly by local regulation. And because we operate globally, we are also very guided by what global regulations expect us to do. So you're not only guided by, for example, SEBI and RBI, you're also guided by what HKMA or PRA request you to do. And that is something that we replicate in India. And in fact, if you were to look at what global institutions bring to the wealth management business in a market like India, first among them is the suitability framework. And the suitability framework is globally validated. And hence when it applies to India, and I know that when Ashish was here and Ashish was talking about how we're going to simplify some of the KYC norms inside GIFT City, I absolutely agree to what he's saying. But I think when you look at applying global standards on some of these elements, it really enhances the qualitative experience that the client goes through, and of course enables resilience from a risk point of view. The second, of course, is when we bring in especially discretionary advisory framework. Rajesh, of course, I'm sure will relate to this. I think globally, if you look at large private banking institutions, they fundamentally run on a discretionary framework. But if you look at India, India runs on a consultative framework. Customers do not appreciate you taking decisions for them. Customers really want to consult with you and then take a decision. I think that's fundamentally different when you look at large evolved private bank markets and ourselves. And that is again where I think when you talked about cyber and resilience, I think when you deploy frameworks like that, your global experience really counts. And finally, third, I think, and which is really crucial in my experience, what really stands out is the fact that it is no longer about prevention. I think cyber resilience is no longer about prevention. It is really about the person who's going to deliver that entire capability to clients. And in our experience, what happens if you look at all kind of cyber events that are taking place, one of the most critical events and most dangerous events that's taking place are things around impersonation. Things around the individual losing integrity in front of, and where all structures basically fail. And to my mind, I think while cyber risk and cyber resilience and framework shall continue, to my mind, the real reference to risk is going to the person who delivers it, the individual delivers it, and institutions would need to build integrity frameworks which enable cultural resilience more than any other form of resilience.
So I'll come to the last question of the panel. And this is a question that I'll ask each of my panelists to answer. What do you see as the most important challenge or risk in your private banking business in 2026? Rajesh. One sentence answer.
Country risk. You need to diversify. You need to, and I'll take maybe 3 sentences. But we at 361 run India's largest alternates platform. We probably got about 55,000 crore rupees of alternate assets. And I can tell you that that is what has saved us from a lot of volatility in the last 4 or 5 years, right? We own, between us and our clients, we own 15% of all REITs and InvITs in India, listed REITs and InvITs in India. And needless to say, that alone has delivered better outcomes than most listed portfolios in the last 4 or 5 years.
Absolutely, absolutely.
So if you've not managed to diversify, both for country risk as well as asset class risk, I think that's the biggest risk you have as an investor or as an advisor to investors in India today.
Wonderful. Partho.
I think succession planning, less than 20% of India does not have that. It's a big, big risk.
Shaival.
I think in an environment where succession planning is taking place in multi-jurisdictional diversified markets, regulatory risk to my mind is very, very critical. Regulations are different, they're evolving at different pace, at different levels across the world. And if you're not really able to be fully cognizant of that and enable, I think you carry very large regulatory risk.
Wow. Thank you so much, guys. It was such a privilege to have asked you some of my thoughts, which I was struggling with, and you have really clarified each and every point so nicely. Thank you very much. And on behalf of Indian Chamber of Commerce, I think it has been a great session. And we have really touched some of the most important parts of the challenges that the private banking industry is facing. And lastly, the 3 things that all of you have touched upon, you know, from country risk to succession planning to regulatory has been my own key takeaways from this session. Thank you so much, gentlemen. Thank you very much.
Thank you, Shomojit. Esteemed panelists, starting with Mr. Rajesh Nambiar, co-business and Mr. Vineet Malhotra, co-founder and CEO, Compound Express Private Limited. Please drop your lucky draw coupons one part into the fish bowl. The team will go around to collect it for the lucky draw to happen. And while going also, please collect your Presto memento after the session. So over to you, ma'am.
Thank you. A very good evening and lovely to be here, by the way. And I know this is the last session and we would like to make this as interesting as possible. But when Shanthan told me that it is going to be over a Jarmudi and a gupshup kind of a conversation, I was little worried, to be very honest, because the news that you read recently, I think yesterday or day before, is that the shopkeeper who served the Jarmudi to the Prime Minister has been threatened, saying why he served it and what is like, in terms of the kind of opposition that can come to it. So but nevertheless, this is being served by my home, which is also Indian Chamber of Commerce here, and lovely to have this session. And thanks for the people who are staying back and people who are also going to participate in the lucky draw kind of a thing. Having Vineet here is absolutely indeed a pleasure, and we really will learn a lot, right, in terms of looking at his career graph, right, in terms of what he has done and how the career is moved, right, literally from being, his background is that he's a chartered accountant and a cost accountant, and that too with rank holder. And absolutely from there, he didn't become a typical chartered accountant and a cost accountant that in the country we expect them to be in a big four or be in a big CFO role kind of a thing, right? He changed the color of what can be done. So we will learn from him on what is that look from the HSBC trading floors to become an Indian fintech, right? In terms of what is the career moves that he has made and what are the learnings, what it has been to see in India from the other side and things like that. So we'll spend few minutes with Vineet on that. Over to you, Vineet.
Thanks very much, Gayatri. I think we need to bring the energy back in the room.
Right.
I don't like to sit and talk. That's my problem. I love to stand and talk, but maybe I'm not going to break that rule.
That's okay. We can stand and talk too.
Very happy to be here. I hope the others can also join in. When you talk about career graph, right, you want to know a little bit about what I did and what choices I made. See, there is a point in time when you take a risk. You can either take risk at 25 years of age or 52. And why I say that is because at the start of your life, you don't have much to lose. It's time and opportunity. And the way we grew up in India, it was all about a standard formula to success. You study, you get good grades, you get a good job, and you climb the ladder, right? I joke with people that they take 30 years to go from MT to MD, management trainee to managing director. Somebody mentioned there's a management trainee in the room, so happy to chat to you afterwards. The point is, the world has changed. If some of you go to China and you talk to somebody in China, what do you want to do after college? 80% of people say enterprise. They want to become entrepreneurs. What do the other 20% do? They want to work for the government. India, the story is quite different. So anyway, there are many interesting comparisons. What I did was I qualified. I come from a small town of Nagpur. Yes, did my CA. Fortunate to be academically, doing okay. So this is merit list, all that. Got some good jobs. But I think once I went into the world in the audit profession and the accounting profession, income tax, I realized I can't do this for the next 40 years. So I left India in the early 90s, just when the liberalization was starting. Had a career with HSBC, 15 years in the Middle East, in Dubai, then moved to New York, and then moved to Hong Kong. And all along, this gave me an opportunity to build a business in each of these areas. And that's when I learned technology. So I'm an accountant turned engineer, which is an odd combo. Life then took me to BlackRock in Hong Kong. And then from BlackRock, I moved to San Francisco. And very recently, I have come to India. So I think that's my quick career graph. That's probably not very interesting. Maybe we should go and talk about wealth management and
We
other
will come
stuff.
to wealth management,
We'll
but I'm
come
not
back.
going to leave your journey just like that. Coming back to India from BlackRock, right? Was it a pull or a push? Or did you see the opportunity in India interesting to you? What made you come back?
Yeah. So paths in life are not always linear.
Yeah.
I was doing extremely well, as a managing director of BlackRock, sitting in San Francisco with a global perspective, lots of people reporting to you. So some people are very happy with that. I became involved with Berkeley's innovation center called Berkeley Skydeck, which is the University of California, Berkeley. I used to meet really, really smart people there. These are 25-year-old PhDs, unheard of, right? And then I thought to myself that I've spent all my time doing a corporate job, being in that world for a very long time. What's next? And today, hopefully with a bit of longevity, there are a lot of miles left in you.
Absolutely.
And the bug of entrepreneurship struck me at Berkeley. So I started creating something. Now, here's another factor, serendipity. I bounced my startup idea of Aditi Kothari Desai of the DSP Group, who's a dear friend as well from our association. Those days was called DSP BlackRock. And she's the one who said, if you want to do this, why not in India? India gives you scale. India gives you opportunity. India has a need. And I'll tell you the last reason why I came. We're all human beings. My mother lives in India. She's 80 years old. I'd rather be with her now when she can cook food for me and give me her homemade food, which I'll enjoy, rather than as some American coming to meet a mother when she's in hospital, So that's the
Wonderful.
personal part.
Absolutely amazing. And what your journey has been, and also the reasons, right? It's a combination of what we really are, where we come back to the roots, and for what we come back to the roots, and how we also build something, right? Thank you. Thank you for sharing that. And it's absolutely wonderful, Vineet. And I think that you see Berkeley and Skydeck giving advice to the young fintech folks out there is maybe like, it's like an adrenaline rush job, right? Kind of a thing. You meet so many youngsters and you meet so many of them bubbling with ideas, and we will come to that as part of the conversation as well. From coming to India, I would like to also understand from you, what are the basis of or the fundamentals of building the Compounding Express, right? Your organization, and what would you call that as a success, and how will you measure that, and what are the things that you personally feel that you have to do with Compound Express?
Yeah, so for those of you who don't know what Compound Express is, it's a platform for financial intermediaries. I hope you can hear me okay?
Yeah.
It's all right? Okay, good. So let's take an analogy, the medical industry, right? Now, how many of you, and let's wake up the room a little bit. I want full audience participation.
Exactly.
When was the last time you went to see a doctor and the doctor had only two instruments, a thermometer and a stethoscope? That's it. And he'll hold your wrist and tell you all your problems. When was the last time you did that? At least I did that maybe 30 years ago. Many, many years ago. The doctor of today will do a blood test, do blood work, send you for a CT scan, there are machines, there are tools, there are technologies they use. So the prediction can be far more accurate. There's less guessing and more predictability. So we had a thesis that the advisors and financial intermediaries and mutual fund distributors included do not have the right tools to do their work. That's a thesis, right? Thesis number 2, the richest people in the world are running their business on an Excel worksheet. That is absolutely true. You look at some of the richest family offices, and I'm privy to some of them in the UK, all they have is an Excel sheet. And the people who are not so rich, the 500 rupee SIP doer, has access to a Grow app and a Zerodha app, and he can look at his XIRR, and he can do all kind of portfolio attribution. Why should an MFD's customer be deprived of this? That's thesis number 2. Thesis number 3, I think our system has so much friction that it's a mutual fund system that has just grown over the years. And I'll ask you a simple question. Do you know how many RTAs there are in India? Registrars and transfer agents, which is the backbone of the mutual fund industry.
Yeah.
There may be 45 to 50 mutual fund companies, but how many RTAs are there? Anyone in the room?
Take a guess.
I saw some fingers going up there.
There are
Two.
two. I
Two.
can see 2 as an answer.
So there is a duopoly. And there's a duopoly in many industries here, whether it's telecom, there's a duopoly, there's 2, right? So in many industries. How many RTAs are there in the US, you think? Anyone? Any guesses? 50. So when you have an institution, an economy which has 50 people trying to do better than the other one, there is fair competition and there's amazing flow of data. Data flows like oil. Here we try to restrict data. We think data is very precious. Arey, kisi ko data nahi dene ka, data nahi, worried. There, the point is, if you don't give data, how does the machinery run? Data is like oil. You need to let the oil flow through the system. You need guardrails. So we had a few theses that we will come in, we will create something in a slightly different manner. We will move the conversation from transaction to relationship. Therefore, we brought in CRM, which is embedded inside. We brought in AI, which will be deeply integrated with the client book. And our goal is to make the doctor better equipped with tools. I think that's my final answer to that question. Now, we're in the early stage, so, a lot of learning for us. And one of the reasons I come to places like this is not to share with you, but to learn from you. Because every conversation is quite enlightening. So
Absolutely.
that's it.
Thank you. Thank you, Vineet, for sharing that. And I think an ambition that the country definitely needs for entrepreneurs like Vineet, right, or people who really want to do this in the future, where we will really be looking at in terms of what are we solving for, right? At the end of the day, that's what matters, I think. So in relation to what you said about the technology or the data, a couple of questions around that, Vineet, right? In the mutual funds area, right, what does really digital transformation mean? And how are we, right? Are we somewhere here, wherever we are? And what is left to be done, right? And what can be done better? And what's your thoughts on that from a digital transformation perspective?
Yeah, that's a great question. The word digital, I think, has now become so omnipresent that probably it should go away from our vocabulary.
Yeah.
What does digital transformation really mean? If you go back 5 years, it was about removing paper, removing the friction, making it easier to do business. Quite simply, that was digital transformation. You needed a front end, so you needed a mobile app, you needed a website, it had to integrate with data. All that was all transformative. Today, over 90% of mutual fund transactions are happening without form filling. So that is one part of transformation, but how is it changing anything? It's just incremental value.
That's right.
The true transformation, I would say, is not digital, but it's human transformation. The true transformation is when the role of the human being changes. And I feel the impact of digital transformation will be felt not in the shiny front area, well, let me make a nice app with some nice widgets and it looks very good, but it's in the back in the middle office. Now we talk about new products getting launched. Mutual fund companies are launching SIF, right? Are they setting up new teams for SIF? The previous panel talked about Gift City. I bet you they have put a lot of money and people in that. True transformation will be when you can do more without adding resources. and compliance checks, portfolio risk analysis,
Right.
client servicing. You know, we had some private banks here. If one private banker can serve 100 clients, going forward, the same private banker can serve 500 clients.
That's right.
That is transformation. So I feel we are a long way away from that. And let me also tell you that not that the US has achieved that either.
That's right.
That is the holy grail. So we're all inching towards that, but it needs some very transformative activities in the back office and willingness to use technology in a way
Yeah.
that the human is not, it's not technology being added to the human, it's the other way around.
That's right.
Where you have to consider the human being added to technology.
That's right.
Where will I need a driver for this car? Or will I let the car run automatically? So that's the true test of transformation.
Absolutely. I think we always think that the other countries are far ahead, but I think in some industries we learn that it's not that the difference is high, but it is the reverse, as he said, right? Bringing the human to technology. That makes a huge difference in terms of getting the right results, right? Absolutely. Thank you for that. And also there is a lot of discussions that's happening, right? We heard even today. What's the hypothesis reality in AI with respect to at least the wealth management, asset management, wealth management industry? What's been your experience and what do you think is right now happening in that?
So again, in the interest of waking up the room a little bit, I just want you to raise your hand if you hold one asset class, which is called crypto. Does anyone hold crypto in this room? One hand slightly going up, no?
Like this?
Not a
Like
single
this?
person in this room holds crypto? No?
No?
Bitcoin, Ethereum, Dogecoin,
Ethereum?
IBIT, crypto ETF?
Yes.
No?
No.
Okay. When crypto came out, it was based, why am I asking this question?
Yeah.
It was based on a technology called blockchain.
Blockchain, yeah.
10 years ago. Everyone was super excited that this thing called blockchain has come. You know, I myself was in HSBC, and in true HSBC style, no offense, where is Saibal? Is he here? Okay. A lot of things were done for PR. We did one letter of credit between Hong Kong and Australia on the blockchain, but it was only one letter of credit. But lakhs of LCs were being opened the traditional way. So there are some technologies which have more hype than real results. AI is not one of them. What I want to say is that AI is here to stay. It's not hype. Again, everybody's understanding of AI is different. There is probabilistic AI and there's deterministic AI. Probabilistic means tell me how I can derive more alpha in the next 5 years. Which sector should I go into? Now, all of that, I'm also skeptical about the results. It may yield a little bit of difference, but where I'm super positive is AI in the operations world, the client service world, answering questions. As a mutual fund distributor, when your client says, I have 10 funds, but tell me what is my exposure to Bajaj Auto across my 10 funds? What would a distributor say? I dekhta hu, report bana ke bhejunga Monday ko, right? That's a typical response. AI tells you that in 3 seconds on our platform as well. Or another deeper question, what is my overlap across these funds? What's the overlap? Because every fund could have Bajaj Auto. And then my overall exposure would be much higher than what I think. AI answers questions. AI gives you intelligence. One of our best use of AI today we are seeing in the platform is meeting prep. I am meeting Shambhajit in the morning. What should I talk to him about? The RM does not know the history of 20 years that I've had with this person. It's humanly impossible. AI is best used for those things which you do not know, and it can pull out from the data very deterministic. There is no element of doubt. It is not replacing any human being. It's just making the human more intelligent. So I think it'll be fairly transformational in the client service category, in the compliance category, and the risk management category. Those are 3 where I'm super bullish on AI.
Perfect. I think AI is definitely here to stay, is my view as well. It's not that it is just like come and gone kind of a scenario, but where we use AI and how we use AI and for what results do we want to use AI will determine on what kind of efficiencies that we want to bring in. And I agree with you. I think client service is a very sweet spot to start it with, right? Absolutely. And also, of course, extending it into in terms of risk frameworks and measuring it kind of scenario, I think it'll help a lot on using them. There are multiple use cases people are right in terms of working on it. How many of you are using something about AI in asset management or wealth management? Any one of you? Any use cases? Anything that you are driving towards in AI? Not yet.
Well, I'll mention one. One of the gentlemen
Yes.
on this previous panel, the company he comes from, we work with them.
Okay.
This company receives 20,000 emails a month.
Wow.
Okay? There are 20 days, working days, when the stock market is open. So what does that mean? About 1,000 emails a day. Now, is it normal? I think it's not normal. Not normal. Means somewhere the processes are not delivering exactly what you want to the customer. So we've created a bot that reads these emails, goes to the knowledge database, answers almost 80 to 90% of them pretty accurately, and where the AI can't answer, it transfers it to the human being to answer. Now, they are super happy with the performance. This is a very simple use case of AI where it understands context, it understands the client position. Oh, I just want a report for my capital gains for these 3 clients. That could be a simple use of AI.
Absolutely.
But there's far more to that. So,
Thank you. Absolutely a fantastic thing where you improve the efficiency immediately, right? With AI. That's a way to you start using AI as well, right? In terms of doing it. Shifting a little bit from technology and what we have seen, right? In terms of the global capital, right? And what is India's ambition? And what are the sentiments of, right, in terms of the global institutional investors? How does it look like, right? In terms of how does maybe the canvas look like? You've sat in the rooms of BlackRock's, right? Kind of organizations, which makes a huge responsible decisions on what kind of allocations can come to India, right? From there to what are the GIIs looking at? What is it that the country has to, right, in terms of where does the country stand, right, in doing it? What are your views on that?
well, it's a very personal perspective. I'm sure there are experts on this topic, but I'll just tell you a couple of things. One, and there are some shifts as well in the
Yes.
thinking. So the thing that has not shifted is India has talent. India comes at a lower cost. India has large scalable resource pools, which you can't scale everywhere. Try to hire 200 engineers in San Francisco, it will take a long time. India has English language capability, which is very different from China or other places that also have talent. So these are things that are constant. Those have not changed. In the last 20 years, nothing has changed there. What has changed is the perception of India from being a producer to also being a consumer. It is both a producer of goods and resources and technology, as well as a market where the same technology can be used, right? So that has definitely changed. The other perspective that large organizations have, and I was smiling to myself when somebody was saying AI, there's some AI officer appointed in London. That is the absolute wrong way to do AI. That's the wrong way because it creates so much bureaucracy and every human being doing a job has to, just adopt it. The best way to do AI is just adopt it. So a lot of these foreign organizations have a perspective of force-fitting India as one of the other markets. Oh, let's see what's happening in China. Let's do that in India. But for those of us who've lived here, grown up here, I may be abroad, but I've grown up here. I've been here every 3 months. I used to come. India is unique. I'll tell you 3 very, very quick examples. How is wealth management done in America, in the Middle East, and China? There are 3 different ways. In America, it is advice-led and tech-executed. So advisor has a really big role in America in making decisions. Yeah. How to allocate, what should go to 401k, what should not go there, What should be your college savings plan? What's the tax benefit? A lot of advice. Okay, now let's come to China. China is social. It's a huge social society. For those of you who heard of WeChat, if the message is on WeChat ki ye theek hai, then 5,000 people will go and follow that. They will not talk to any advisor, right? Executed and researched everything on social, their social channels. Middle East, unless the guy has shaken your hand in person, he's not giving you money. That 25 crore check that we were talking about in the previous panel, that's not coming unless he's shaken your hand and looked at you in your eyes, got the trust factor. Now, India, a combination of all three. We're a hybrid market. There is no market in the world that is a mirror image of India. And that's what I say to my colleagues who try to come in and set up, oh, we will only do direct plans in India. We will not go regular. Look what's happening now. Okay? People are shifting to all. We are a hybrid market. Let's face it, we are not a DIY market. There is a role for assistance and there is a role for DIY. And I think that journey will always remain that way.
Lovely. Lovely. I think we are unique. We will all acknowledge that. And India is a country, if we serve India, I think any other country can be served as well. That's a kind of a feeling because it's always unique to serve in our country. That's the learning, right? Little about the Skydeck and the FinTech advice lens that we have had with, UC Berkeley. From that advice lens, if you look at maybe India's FinTechs, what's getting right in the financial services segment and what's not getting right in the financial services segment by the FinTech teams?
You mean in India, right?
In India.
Yeah, so a common approach in fintechs is to launch something to earn, right? Everyone's in a rush to get the product out, get your flows going and get your valuations up. That I think is the wrong way to look at business. I mean, the customer has to be the absolute center of everything.
Got it.
Valuation is such an irrelevant thing in the early stages of a fintech. It should not even be talked about. And I see too many fintech founders, a lot of prime institution graduates, just thinking about, when is my next 1,000 crore valuation coming? So that's one mistake people make is they think of valuation as opposed to solving a problem. The second challenge that fintechs have here is creating a shiny app. So I'll give you an example. I downloaded an app called my Net Worth app. And I will not name it because it wouldn't be right for me to criticize anyone. So I very excitedly, I said, great, it'll tell me my net worth. So I go, I link all my bank accounts, my stock accounts, everything. And it tells me my net worth is 1,24,000 negative. I get a shock. I said, that is not my net worth. All it had done is it picked up only my credit card outstanding balance and all the other feeds did not work. Now, why am I telling you this story? I'm telling you this story because this is also a fintech. They're trying to solve a good problem, but not doing it the hard way. They're taking shortcuts, putting wrappers around existing sources of data. Deep integration of data with this ultimate source of data is what fintech should do.
Absolutely.
Not put wrappers around existing problems, which is what our mutual fund industry has. Give me a report and I'll convert the report into your app and show it back to you. Go to the source of the data. So I think these are some important lessons. I think we have to solve some really, really hard problems.
Got it.
And I'll tell you one example in BlackRock, and you'll be a little surprised to know this. We hired a professor, Professor Stephen Boyd, if I remember his name correctly. What did he do? He's a Stanford electrical engineering professor. Now, what job does he have in a asset management company like? No work, right? His job, he invented LiDAR. LiDAR is the technology which prevents two aircrafts from colliding. When you have 400 aircrafts flying over your city, these have to maintain a distance in the technology. We brought him in to help with cash reconciliation so that we don't increase the level of reconciliation efficiency, we eliminate reconciliation. Reconciliation means one thing has to match another. He was brought in to eliminate the need to match anything. So that's the way smart companies think, bringing talent from outside industries to solve some basic problems in financial. So I would encourage fintech entrepreneurs to think a little harder and deeper about not what they're solving, but how they're solving it.
Absolutely. Amazing disruptive thinking. remove reconciliation and bring absolutely an electrical engineering prof to BlackRock, right? That's an amazing thing to do. And I think I also strongly believe that ideas that are disruptive make the world much more easier to live. And check on that idea, it may work and it will definitely ease the problem out completely, rather than building, convoluted solutions about it on either taking the data and wrapper around, etc., right? For the example that Vineet gave. I know in the interest of time, and Sayantan is looking at me, I know that we have been running late. I'll ask one final question to Vineet, and then we will wrap it up. I would like to learn from you more than anything. What was the kind of what you would classify as maybe many advices you would have given in the Skydeck, role that you played with UC Berkeley? But which one do you consider the best, which shaped maybe the fintech for the better? And what kind of an advice was it?
What advice?
Yeah.
Sounds like a rapid fire round. Yeah. Yeah.
No,
So
that's the last question. I would like to learn more from this.
no, I think we don't have some unique skill of giving any advice. It's all bringing our experience to bear at that moment, right? So one of the things that stands out for me is let perfect not be the enemy of the good. It's a saying by Voltaire. There is also a book called Good to Great. You'll see some of that reflected, Jim Collins. That advice I always use, because these entrepreneurs look for perfection and not launch anything till it is perfect. And I say you launch to learn, you don't launch to earn. So even if you feel that my car is ready to hit the road, I mean, you look at AI, what ChatGPT was 2 years ago and what it is today. It's hugely different. They didn't wait. They didn't say, no, we'll wait till it's perfect. So my biggest, if you call it advice, but biggest learning for everyone is just go when you think you have a reasonable amount of good stuff that is making a difference. Go and not wait for that perfect moment, because you know what? There is no system in this world that is perfect anyway. So why wait? Speed is of the essence.
Absolutely. Lovely thing to see. Speed is of the essence, and how to go to market with a near perfect, solution, but not the perfect, because there is nothing called perfect, because we can improve it further. Amazing, sort of chat with you, Vineet. I think we can go on for maybe an hour, but I'll come and visit your office and meet with you in Mumbai, which is our home, and we will definitely do that. Love to do that. Thank you. Thanks for being here, and thanks for your wonderful, interactive session. And thanks to ICC for hosting us here today. Thanks a lot.
Thank you very much.
Thank you, ma'am. May I request Mr. Atanu Sen to kindly come forward and felicitate Gayatri ma'am and then Vineet sir.
Oh.